Banks are an integral part of modern economies and play a vital role in the financial system. However, banks can also be vulnerable to a wide range of factors that can lead to their collapse. Some of the common causes of bank collapse include a lack of liquidity, mismanagement, fraud, macroeconomic factors, and excessive risk-taking. One of the primary causes of bank collapse is a lack of liquidity. Banks rely heavily on short-term funding sources such as deposits and commercial paper to meet their daily obligations. In times of financial distress, banks may experience a sudden withdrawal of these funding sources, which can result in a lack of cash reserves and ultimately lead to bankruptcy. Mismanagement is another significant cause of bank collapse. Poor decision-making by bank executives, such as risky investments or imprudent lending practices, can put the bank's financial health at risk. In addition, a lack of oversight and internal controls can make the bank vulnerable to fraud and other types of financial misconduct. Fraud is another common cause of bank collapse. Banks are particularly vulnerable to fraud because they handle large sums of money and engage in complex financial transactions. Fraud can take many forms, including embezzlement, Ponzi schemes, and accounting fraud. Macroeconomic factors such as recessions, inflation, and changes in interest rates can also contribute to bank collapse. In times of economic downturn, banks may experience a decrease in profits due to a reduction in lending activity and increased defaults on loans. This can lead to a decline in the bank's financial health and ultimately result in bankruptcy. Excessive risk-taking is another common cause of bank collapse. Banks that engage in high-risk investments or have a large exposure to a particular market or asset class may be vulnerable to sudden market fluctuations or economic shocks. This can lead to significant losses and ultimately result in the bank's collapse. Regulatory issues can also contribute to bank collapse. Banks that are not in compliance with regulatory requirements or are subject to regulatory penalties may experience a decline in their financial health, which can ultimately lead to bankruptcy. Technology is another factor that can contribute to bank collapse. Cybersecurity breaches and other technology-related issues can lead to a loss of customer confidence and trust, which can result in a decline in deposits and ultimately lead to the bank's collapse. Political instability and geopolitical risks can also contribute to bank collapse. In regions where there is political instability or heightened geopolitical risks, banks may face challenges in managing their operations and may experience a decline in their financial health. Thanks for watching.